Ladies and gentlemen, something big is happening in Iraq's financial landscape, and it may not make the same headlines as oil exports or currency crises, but it could quietly reshape the future of money in the country. Today, Iraq announced that it is expanding its digital payment system, a move designed not only to modernize the way Iraqis pay for goods and services, but also to reduce the nation's heavy dependence on the US dollar. For decades, Iraq's economy has been dominated by cash, dollars and dinars moving through markets, traders, and households. In Baghdad's bazaars, in Erbil's shopping centers, in Basra's ports, cash is king. But this heavy reliance on paper money has come at a cost. It has made the economy vulnerable to smuggling, corruption, and manipulation. It has fueled the black market, where dollars trade at inflated rates. And it has tied Iraq's financial stability to the ups and downs of U.S. monetary policy. That's why today's step is so important. By expanding digital payments, Iraq's central bank and government are signaling a shift toward transparency, efficiency, and most importantly, sovereignty. They want more Iraqis to use cards, apps, and electronic transfers instead of cash. They want salaries, government benefits, and even everyday purchases to flow through a system that is monitored, traceable, and resistant to manipulation. But here's the real motivation. The less Iraq relies on physical US dollars, the more control it can reclaim over its own currency, the dinar. In recent months, we've seen how cash dollar shortages, US banking restrictions, and smuggling networks have wreaked havoc on the exchange rate. Families have paid the price with rising costs of food, medicine, and fuel. By pushing Iraqis into the digital ecosystem, the central bank hopes to shrink the black market's grip and weaken the dollar's dominance. Of course, this won't happen overnight. Iraq still faces enormous challenges. Many businesses, especially small shops, aren't equipped with digital infrastructure. Millions of Iraqis don't have access to reliable internet or banking services. And there's still deep mistrust in government-led systems after years of corruption and mismanagement. But the momentum is building. Already, some government salaries are being paid electronically. Major retailers are beginning to adopt card readers. And fintech startups are emerging to bring digital wallets to younger Iraqis hungry for change. This expansion could mean something far bigger than just convenience. It could mark the beginning of a currency revolution, one where the dinar gradually gains independence from the dollar. Imagine a future where Iraqi citizens are no longer rushing to dollar dealers in Qarada or Sulaymaniyah every time the exchange rate shifts. Imagine a system where digital dinar transactions dominate, where the government can track flows, stop smuggling, and stabilize the economy with greater precision. But for now, Iraq is just taking its first steps. The road will be long. The resistance will be real, but today's announcement is a clear signal. Iraq wants to break free from the dollar's shadow, and digital payments are the weapon of choice.
Explored the announcement of Iraq's digital payment expansion. Let's break down what this really means for Iraq's economy, its people, and the future of the dinar. Because this isn't just about using cards instead of cash. It's about power, control, and independence from the US dollar. Let's start with the ordinary Iraqi citizen, the shopper in Baghdad's Qarada district, the worker in Basra, the student in Mosul. For years, daily life has been defined by cash transactions. People get paid in cash, they spend in cash, and they save in cash. This habit is deeply rooted in Iraq's culture, especially after decades of war, sanctions, and mistrust in banking institutions. But what happens when payments go digital? For one, it changes the experience of buying and selling. A family walking into a supermarket can pay with a card linked directly to their bank account. A worker in Erbil who once had to wait in long queues for cash withdrawals might now receive his salary through a mobile wallet, ready to spend instantly. Even small businesses, street vendors, taxi drivers, will eventually be able to accept digital payments if the infrastructure spreads. This creates convenience, security, and above all, a reduction in the daily scramble for dollars. But it's not just about convenience, it's about prices. Right now, when the dollar rises on the black market, bread, rice, cooking oil, and fuel follow. That's because importers buy goods in dollars, often through cash transactions in parallel markets. With more digital payments denominated in dinars, the central bank can directly monitor and regulate flows, ensuring that traders and importers rely less on black market dollars and more on official, traceable channels. If done correctly, this could weaken the grip of dollar fluctuations on everyday prices. Now let's talk about the business community. Importers, wholesalers, and retailers currently rely heavily on cash purchases of dollars to finance shipments from Turkey, China, Iran, and beyond. This cash-based model fuels smuggling networks, where billions of dollars leak out of Iraq annually. With digital payments, the government can track where money goes, who is buying foreign currency, and whether it matches legitimate import activity. This could choke off smuggling routes and reduce capital flight, keeping more value inside Iraq's economy. But here's where the story gets more interesting: the political and strategic dimension. For decades, Iraq's monetary system has been tied to the dollar. Oil revenues come in dollars, trade depends on dollars, and savings are often held in dollars. This dependence has given Washington enormous leverage. When the U.S. imposed stricter monitoring on Iraqi banks earlier this year, suddenly thousands of businesses couldn't access dollars, causing the exchange rate to spike. That episode reminded Iraq's leaders of just how vulnerable they are. By pushing Iraqis into digital payments, denominated primarily in dinars, the central bank is making a statement. We want less dependence on cash dollars and more reliance on our own system. The more transactions happen inside this closed loop, the less room the black market has to operate. And over time, the dinar could gain strength simply by becoming the default unit of exchange in a more traceable, controlled system. But let's be clear, the road ahead won't be smooth. Iraq faces several major challenges in this transition. First, infrastructure. Not every town in Iraq has reliable electricity, let alone internet access. For digital payments to work, card readers, ATMs, and mobile networks need to be reliable. A power outage in a market district could paralyze transactions if there's no backup cash system. This makes rollout uneven, with big cities adopting faster than rural areas. Second, trust. Many Iraqis don't trust banks. They fear corruption, sudden freezes, or even theft. Digital systems require people to put their money in banks or electronic wallets, and that leap of faith may be too big for some. Convincing citizens that digital money is safer than cash will require transparency and proof that the system can protect their savings. Third, corruption risks. While digital systems can reduce black market cash flows, they also create new opportunities for cybercrime, hacking, and government abuse. If the digital payment system is controlled by politically connected banks or manipulated by officials, Iraqis may simply replace one form of vulnerability with another. The key will be whether this expansion is accompanied by independent oversight and strong regulations. Fourth, resistance from vested interests. Let's not forget, the black market dollar trade is enormously profitable. Smuggling networks, currency dealers, and even some politicians benefit from the chaos. For them, digital payments and tighter monitoring are threats to their income. That means resistance is inevitable, whether through lobbying, sabotage, or simply refusing to adopt the system. Now, let's consider the long-term vision. If Iraq successfully expands digital payments, reduces dollar cash use, and strengthens the dinar's role, this could be a stepping stone towards something bigger, a revaluation of the dinar or even a partial de-dollarization of the economy. Think about it. Every time Iraq injects dollars to stabilize the market, it weakens the dinar's credibility. Every time a citizen saves in dollars instead of dinars, the national currency loses status. By building a digital ecosystem where the dinar circulates electronically and efficiently, the central bank lays the groundwork for eventually strengthening its value. If confidence grows, one day Iraq might decide to officially lift the dinar's exchange rate, giving citizens more purchasing power. This isn't happening tomorrow, but the foundation is being laid today. At the same time, Iraq is not alone in this journey. Around the world, countries are exploring central bank digital currencies, CBDCs, and cashless ecosystems to modernize their economies. From China's digital yuan to Nigeria's e-naira, governments are testing new ways to reduce cash reliance. Iraq's system may not be a full CBDC yet, but expanding digital payments puts it on the same global path. The question is, can Iraq overcome its unique challenges, corruption, infrastructure gaps, political instability, to make it work? And finally, let's return to the heart of the matter, the Iraqi people. For the shopkeeper in Najaf, the farmer in Diyala, the taxi driver in Baghdad, will this really change life for the better? If the system works, yes, they could see stable prices, faster payments, safer transactions, and less exposure to the chaos of dollar shortages. So, ladies and gentlemen, this is where Iraq stands today. A nation burdened by dollar dependence, now trying to carve a new path through technology. The expansion of digital payments may seem technical, even boring to some, but in reality, it is one of the most important reforms Iraq has attempted in years. It is not just about tapping a card at the supermarket. It is about sovereignty. It is about whether Iraq can free itself from the dollar's shadow, strengthen the dinar, and give its citizens an economy they can trust. The world is watching, and so are the markets. The next few months will reveal whether this digital leap is the first step toward a stronger, more independent Iraq, or just another experiment lost in the chaos of the country's financial struggles.